You are listening to ChartingWealth.com for Wednesday, the 2nd of November, 2016. Let's jump right into these charts. What do we see going on? We have continued strong down movement in our charts. We now have 3 connected 2-day candles on strong down moves, starting with the candle ending on the 27th of October. Of course, we continue to be below the weekly trend line and below the 2-day trend line on our total market chart, IYY, the exchange traded fund that tracks the entire market. And we see our latest candle, huge strong down moves on our 4-hour chart. We actually crossed over going down on the 4-hour chart back on the morning of the 27th. That was your entry point where we had a nice crossover, the MACD, and, well, now we're using the PPO, which is the percentage price oscillator, just like the MACD, except the MACD uses the actual dollar amount, whereas the price percent oscillator uses the percent of price, which makes it much more comparable across the board. And again, we appreciate JH recommending that to us a few weeks ago. We jumped right on it. We're always ready, willing, and able to change anything we're doing to get a more accurate chart. We thought that was extremely helpful. So what do we see going on? Well, once we had that rotation over, after we had the backup on the short chart and it rotated over going down, very easy to track. We literally, the low of the lows there was 106.54. The high was 107.23. And as we look at what happened in the afternoon on Tuesday the 1st, we see that the low, 104.99. That is a great deal of movement in a very short period of time. Now let's go on to the S&P 500. See what that shows us on our 2-day chart. Oh, for the record, IYY was down about 1%, 0.99%. The S&P 500 is represented by SPY, down 0.72%. Huge down movement as we look at the 2-day candle. Another wick about the length of actually longer than the down red candle itself. Huge down movement. And again, 3 candles connected with a nice 2-day trend line. Remember, the weekly chart has been heading down for quite a while. Also, we crossed over going down back around the 22nd of August, and we have had down movement since that point. A few upward price spikes, but again, down movement. Remember, all things being equal, the market always tends to move in the direction of the biggest chart, and that biggest chart is our weekly chart for our purposes. So we're down below the 2-day trend line. If we look intraday, what do we see? Well, for those of you who shorted the market based upon what our charts were showing us there on the afternoon of the 27th, you have done extremely well. Hopefully, when you did your buy-ins on your inverse trades, you actually put in a good till canceled sell order at whatever profit you would have been happy at, and most of you have probably already been bought out on that. The high on that afternoon of the 27th last Thursday was 114. What was the lowest of the lows throughout the day? 110.90, 109.60. So again, lots of strong down movement. That is just wonderful for those of you who had jumped into a trade. Again, we aren't talking about real money trades. We're talking about practicing. So those of you who are out there with your virtual trades, you, of course, have seen incredible returns on an inverse fund, such as SH. We'll put that in. What is SH? It is the ProShare short of the S&P 500. And, of course, what's it been doing? Well, it spiked over going up in the afternoon on the 27th, just like we talked about happening. The low there was 38.47. The high, 39.03. So again, nice to see that kind of return in 2.5 days. So again, that's what you get when you know how to read a chart and you're out there being smart, making the most of it. We want you to practice with us every day so you can figure out how to read this stuff and it works for you. Again, down 0.72% is what the S&P 500 was for the day. Now let's go into the Qs. It was down 0.75%. And we again have 3 candles with the Qs. Not as well connected as far as a trend line goes, but again, a huge down day, a huge down 2 days as far as the candlesticks go. We're below the 2-day trend line, and we're below the weekly trend line on the Qs. And again, the Qs is the NASDAQ 100, another one of these indexes. If we look intraday, what do we see? On our 4-hour chart, we saw a nice, good crossover on the afternoon of the 27th. The 27th was a big day for crossovers going down. The lowest point that you would have got in, the worst, was 117.67, all the way down at the end of the day to a low of 115.10 on the afternoon of the 1st of November. Now let's continue to look through these markets. Again, that's what we're talking about when we're doing shorts. Those of you looking for a short index, well, that of course QID is the ultra short by ProShares, and of course it has been rocketing up. And of course it was a very inexpensive buy-in. I mean, if you look around the 27th, could have gotten in around $24 all the way up to a high of $25.71 throughout the course of the afternoon on Tuesday, the 1st of November. Okay, now lastly, we're going to go back to our 2-day chart and we're going to take a look at gold. Gold was up as the markets were crashing. Gold was up 0.65% for the day. Gold, of course, has blown through over the last 4 days its weekly trend line. We've gone ahead and drawn a new trend line since we had a crossover going up actually on the 1st of November with big up movement in gold. And we've seen the derivative oscillator take off. We've seen the crossover on the PPO, or the old MACD as we used to call it. And we continue to see that up movement. Now, if we look intraday on our 4-hour chart, what do we see? Huge up movement in the morning, followed by some more up movement in the afternoon. We're well above the 2-day trend line. And we've seen gold on this 4-hour chart crossover going up. If you'd have bought in at the worst point at 120.42, it's all the way up. The high for the day, 123.21. Pretty good gains over the course of just a couple of weeks as far as gold continuing to trundle up. Well, that is where we are, my friends. Reading these charts, waiting, biding your time for everything to fall into sync, not getting impatient, training on these things, and when the getting's good, you get in, you ride these charts, you make money in your virtual trading account, you understand how it works. Remember, the last few months we've been going through the summer doldrums. Summer doldrums are always tough. That's why there's that adage, sell in May and go away. And you come back when? In the fall, for the fall-winter trading zone, when you get nice, cleaner moves typically in the market, whether it's up or down. Because remember, you can become a sophisticated investor and you can make money in inverse funds when the market's crashing, as well as regular ETFs when the market's going up. It's what it's all about. If you can read a chart, you can find your path to riches. It literally can be your roadmap. But you got to practice. You got to learn how to do this. That's why you got to set up a virtual trading account. Anybody who thinks they can listen and go out on their own after just a few short lessons and start using real money will soon not have that real money. That's why we're an education firm. We want you to practice. We want you to learn this. When you get good at it, you can make up your own decisions. You can make up your own mind. You can establish your own trading techniques, modify what you hear from us for what works in your schedule, with your abilities, and with the kind of desires you have to trade whatever it is you want to trade. Whether it's commodities, gold, silver, indexes, whatever, learn how this works. If you can read one chart, you can read many charts, but you got to have charts that work. That's why we work so hard to keep it simple and to use charting techniques that are easy to understand and work. If you don't already have our How to Read a Stock Chart video, you need it, along with our daily market worksheet that you need to fill out every single day, along with the layout that we use at freestockcharts.com. You can get all that by signing up for our newsletter at Charting Wealth. If you want to help us out, help us with our metrics on iTunes, go subscribe to our channel at iTunes, give us a 5-star rating, say something nice about us if you appreciate all the free, valuable stuff we bring to you every day. Additionally, go to YouTube, sign up for our channel by simply subscribing, and you will get every day all the work that we do, the training, the layouts, all the work that we provide for you on a daily basis every day the market's open, plus our weekly review and forecast. Thank you so much, my friends. Let us hear from you. God bless from chartingwealth.com.